Okay, good morning, everyone. Looking at the US stock markets, the Dow has again recovered from the 23,500 points level. Since then, we did see the Dow has rejected the 25,000 psychological level. After rejecting the 25,000 psychological level, we did see the Dow has staged a minor pullback, and subsequently on Monday itself, we did see the gap of formation on the Dow as the Dow has retested and subsequently closed above the 25,000 psychological level. However, on overnight, there's the lack of follow-through buying interest beyond the 25,000 psychological level has sent the Dow to close lower, forming the bearish engulfing candle. So moving forward, we're expecting a similar trend to happen as of the previous rejection along the 25,000 psychological level. We could be seeing the Dow heading lower or consolidate towards the 24,500 points to see how it holds there. If the 24,500 points will fail to hold, we might see further pullback on the Dow towards the 24,000 or even towards the 23,500 points level. Until we can see a breakout and a closing above that, and subsequently there's a fall through buy interest over the next couple of days above the 25,000 psychological level, only we can confirm that the Dow could be heading towards the 25,800 points. Similarly, on the S&P 500, we did see the S&P 500 has recovered from the 2600 psychological level. Since then, the S&P 500 has rallied strongly towards the 2750. It rejected the 2750 and staged a minor pullback and subsequently traded on a sideways manner. So moving forward, we're expecting the S&P 500 to trade in a range bound manner between the 2700 towards the 2750 level. Until we can see a breakout above the 2750, only we can confirm that the Dow could be, the S&P 500 could be heading towards the 2800 or even towards the 2870 level. In the meantime, should the 2700 were to fail to hold, further pullback will be seen towards the 2650 or even towards the 2600 psychological level on the S&P 500. The losses on overnight on the US stock markets was mainly due to the renewed concern on the trade talks between US and also China. Okay, some of this on the crude oil prices. Crude oil prices continues to inch higher following the recent breakout above the 66 US dollar per barrel mark. Since then, crude oil prices continues to maintain its stance above the EMA 20 level, and subsequently we did see the crude oil prices has also subsequently breached above the 70 US dollars per barrel mark. Following the breakout above the 70, we did see the crude oil prices continues to march marginally higher towards the 73. So moving forward, we're expecting further upside on the crude oil prices towards the 75. That will be the immediate resistance for now, while any pullback towards the 70 will be a healthy pullback on the crude oil prices. Just give me a minute for the chart to load on the FMKLCI index. Okay, on our local front, the FMKLCI has continues to trend marginally lower following the recent recovery above the 1800 psychological level. We did see the FMKLCI has clawed its way back above the 1840. However, the recovery did not last long as we did see some of the selling pressure has kicked in on the FMKLCI index, mainly due to the selling activities from foreign funds. Foreign funds has been distributing their holdings over the past 12 consecutive trading days. And on yesterday itself, we did see some of the utilities and also the Petronas rated companies were being sold off. So moving forward, we're expecting a further pullback on the FMKLCI in tandem with the weakness in the Wall Street. Violation below the 1840 level will see the key index moving lower towards the 1820 or even towards the 1800 psychological level. On yesterday itself, following the bearish candle as the FMKLCI tripped below the EMA 60 level, we did see the MACD indicator has really turned red, whereas the RSI has tripped below the 50 level yesterday, implying that the weakness over the near term could be intact at current moment. Already, I think Axiata has posted a net loss on its quarterly earnings, so Axiata could be one of the main losers on the FMKLCI, at least for today. On the FM small cap wise, we did see the FM small cap index has again staged a mild recovery from the 13,700 points level towards the 15,180 points. However, we did see the FM small cap index has pulled back and subsequently staged a mild recovery pattern. The mild recovery during this period of time after the general election was short-lived as the FM small cap index formed the shooting star candle on the 17th of May. Subsequently, we did see the confirmation of the reversal pattern on the short term as the FM small cap index has formed the bearish candles over the past couple of days. So moving forward, we're expecting a further pullback on the lower liners on the FM small cap index towards the 14,250 points level to see how it holds there. If you can see some of the support along this level forming a bullish candle or a hammer candle, then only we can confirm that the FM small cap index could be on a recovery trend towards the 15,180 points. Until we can see a breakout and a closing above the 15,180 points, only we can confirm that the FM small cap index is forming the higher low and also the higher high formation over the short term period. For now, the general trend is still forming the lower low and also the lower high formation. Some of the stocks that we can watch out for firstly will be AWC. AWC is still on a downtrend formation, so any recovery from now will be just taken as a technical rebound. AWC has again recovered from the recent low of around the 64 cents level. After hitting that low of 64 cents level, we did see AWC has staged a rebound. It rejected the EMA 60 levels, similar with the early March and subsequently pull back. However, on yesterday itself, we did see the gap formation on the AWC as price breach and also closed above the EMA 60 level. Yesterday's breakout was also confirmed with this trend line breakout above the 75 cents level, accompanied by some of the high volumes. Following the breakout above the 75 cents, we're expecting AWC to see further technical recovery, firstly towards the 83 cents, subsequently towards the 87 or 88 cents level, with your stop loss point located below these 670 cents. If you can take further risk, then your next defense will be located towards the 67.5 cents level on AWC. Just give me a minute for the chart to load. For CMMT, we did see the CMT has been sold off sharply towards the low of 97.5 cents level. After hitting an intraday low of 97.5 cents, so forming a double bottom formation, we did see the CMMT has staged a good breakout above the 1 minute and 6 cents. Subsequently, price continues to inch higher from that point onwards over the past 1 month trading period. Recently, we did seeing a potential short-term breakout pullback continuation pattern on our CIMT as well. This could be the breakout. the pullback and the potential continuation pattern as price yesterday has closed above the EMA 60 level. So moving forward for CMMT, we need to monitor for the price to breach and also close above the 1 ringgit and 18 cents for us to confirm for the recovery on CMMT towards the first target price at the 1 ringgit and 29 cents, subsequently towards the 1 ringgit and 39 cents level. Your stop loss point will be located below the 1 ringgit and 12 cents should there be a breakout above the 1 ringgit and 18 cents on CMMT. Should price breach above the 1 ringgit and 18 cents, we are expecting the MACD indicator to give us a buy signal, whereas RSI has been close mostly above the 50 level over the past 1.5 months to 2 months trading period. For Burma's auto, this is counter we have been mentioned for quite most of the time over the past couple of 2 to 3 months trading period. Burma's auto continues to trend on a sideways manner between the 2 ringgit and 10 cents towards the 2 ringgit and 29 cents level over the past 2 months trading period. And on yesterday itself, we did see price made a good gap up formation as price once again retested the 2 ringgit and 29 cents. It did break out above the 229 on yesterday, but it did not close above that. So we need to monitor for the breakout and a closing above that. Only we can confirm that BAuto could be heading towards the 247 or even towards a new high of 2 ringgit and 60 cents. Your stop loss point will be located towards the 2 ringgit and 10 cents level. One of the key factors driving the automotive stocks is that the post GST price of vehicles might come down. On the chart wise, we are seeing the uptrend in tech orientation formation was re-established. The MA9, 2016 and 120 has been in line since yesterday. If you look at the MACD indicator, you has already issued a buy signal yesterday, whereas RSI has also continues to maintain its stance above the 50 level yesterday as well. For Marsing, price has then recovered from the low of 97.5 cents level. Since then, we did see price has staged a 2 to 3 day recovery. However, we did see the bearish candle was being formed and subsequently price staged a pullback towards near the 97.5 cents level. Recently, we did see once again Marsing has made a good recovery. Price closed above the EMA 60 level, and recently it staged a potential short-term breakout. This could be the short-term breakout, a pullback, and a continuation pattern that we're going to monitor for the next breakout above the 1 ringgit and 16 cents level. Until we can see a breakout above the 1 ringgit and 16 cents, then we can see further upside for technical rebound on Marsing towards the first target price at the 1 ringgit and 30 cents level towards the 1 ringgit and 35 cents. Your stop loss point will be located below the 1 ringgit and 7 cents level on Marsing. On indicators wise, everything is turning quite positive on Marsing right now. As you can see that the MACD indicator has been forming the higher high and also the higher low formation. The MACD line has already crossed above the 0 level over the past couple of days, whereas the RSI has also been maintaining its position mostly above the 50 level over the past 1.5 weeks trading period. Last two companies for today, firstly will be Star Media Group. Star Media Group has announced its plan to dispose its business in Penang. So Star has recovered from the 1 ringgit psychological level. Since then, we did seeing a potential bullish divergence signal on the MACD indicator. Price has been trading lower, but the MACD indicator has been trading higher throughout this period of time. Subsequently, we did see the gap up formation after company has announced its exercise plan. However, on the next day itself, we did see the shooting star candle being formed and the pullback happens. So this could be the short-term breakout, a pullback, and a potential continuation pattern that we're going to monitor for the next breakout above the 1 ringgit and 13 cents. Until we can see a breakout above the 1 ringgit and 13 cents, this could be the potential flag formation breakout that we are looking at for Star to head towards the first target price at 1 ringgit and 18 cents. That will be the intraday target price should there be a breakout above the 1 ringgit and 13 cents, followed by the 1 ringgit and 23 cents level on Star. Your stop loss point will be located below the 1 ringgit and 8 cents, followed by the final defense at the 1 ringgit psychological level. Last company for the day will be DNO. DNO continues to maintain on the sideways trading pattern following the recovery on top of the 55 cents towards the recent peak of 67.5 cents level. However, we are seeing some of the accumulation was taking place throughout this period of time. We did see prices rally towards the 67.5 cents with some of the high volumes. It pulled back without significant volumes. Once again, recovered towards the 67.5 cents level with high volumes. It pulled back or traded on a sideways trend. So until we can see a breakout above the 67.5 cents, only we can confirm that DNO could be heading higher, firstly towards the 74 cents or even towards the previous peak of 80 cents level, while your stop loss point will be located below the 63 cents level should there be a breakout above the 67.5 cents on DNO. If you have any questions, you can put in the chat box. I'll reply you shortly. Over the next couple of days, at least for today and so the next 1 to 2 weeks trading period, most of the companies will be announcing their quarterly results. Do watch out on their announcement. If the results were not good compared to the previous quarter or previous corresponding quarter, then it's best advisable to cut loss or take your profit immediately on the next day at the opening bell. Barwest and for Barwest, earlier we did mention on Barwest to monitor for the breakout above the 1.23 cents level. It did manage to breach above the 1.23 cents. However, there's the lack of fall-through buying interest as price once again staged a pullback. This is a healthy pullback as we are seeing the lower volumes being traded over the past couple of days. So this could be the short-term breakout, pullback, and the continuation pattern towards the 145 or even towards the 1.60 cents level. So any pullback for now will be a healthy one towards the first immediate support level will be located towards the 1 ringgit and 13 cents level. If you can see some of the recovery on top of the 1 ringgit and 13 cents, then price could be heading higher back towards the 145. But in the event that the price were to pull back below the 1 ringgit and 1 cents level, then it's best to cut loss immediately. For growth, we did mention on our morning bus yesterday itself, following the recent breakout above the 86 cents level. So price continues to maintain its position above the 86 cents level on comfort. So if you're holding on to this counter, you can continue to hold on until price, as we are seeing, price could be heading towards this next resistance at the 92 cents or even towards the 199 cents level. Your stop loss point will be located below the 78.5 cents level for comfort. All in all, comfort is potentially forming the short-term symmetrical triangle formation breakout. So this could be the potential short-term symmetrical triangle formation breakout above the 87.5 cents level on comfort. If you look at the just based on a fundamental wise, because Axiata and Tenaga has reported a big set of quarterly earnings, I'll just give you an example like Heng Yuan yesterday. If you look at Heng Yuan, it's quite similar. The company has announced their week results, and the next day itself we did see the gap down formation. So if you short Heng Yuan yesterday, there's not much potential or profit to short on this counter because it did short and subsequently it made a short it did make a good short rally, but on the intraday itself we did see the pullback has happened. And if price were to gap down not much from its previous close, for example like Axiata, if price were to gap down maybe just towards the 5 ringgit level, then there's a potential chance for us to continue to short on Axiata towards the 4 ringgit and 75 cents or even towards the 4 ringgit and 60 cents level. If price were to gap down below the 5 ringgit, then it's best to forget on this counter. On Tenaga, if price were to gap down below the 15 ringgit psychological level, then it's best to forget on this counter. But if price were to gap down just a few ticks or a few cents below yesterday's close, then you still have room to short Tenaga towards the 15 cents or even towards the 15 ringgit or even towards the 14 ringgit and 77 cents level. we need to you need to see something like this. Another company on yesterday, one of the example of the short would be Syscom yesterday. We did see Syscom has announced the week results. So if we did, for example, on yesterday itself, we did see the gap down formation, but it gap down just for a couple of cents, just about 2 to 3 ticks. So there's still room for us to short on intraday basis on Syscom yesterday. So we need to monitor to see how Asata and also Tenaga gap down at the opening bell. If we gap down too much, then it's best to forget to short. It's best not to short on this counter, on those two counter. If there's no further question, then we'll end the morning briefing for today. Thank you.